Yo, 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 yo. What's going on in the hood? Howdy doody, everybody. This is Kunal Desai on the mic, ready to do the Lord's work. What's going on, players, playettes? Good to see everybody. Who do we got in here today? All right. Good. What's up, baby? Everybody in the house. Yo, Ben, how you doing? Paul, are you able to get in here? I emailed you the link. Oh, here, I think I can invite you from here too. Da-da-da-da. Hey, Ben, what's up? Nando, how you doing? Brother, it's good to see you. Hell yeah, Ben, what you doing? All right, we're just waiting on Paul over here. He's raw. I sent him the link a little bit late. Russell, what? Russell, what's up in Tampa, baby? My man. Oh. FTX, let me see, baby. Let's take a look here. Hold on here. While we wait up on Paul, let's take a look at this FTX. Damn. That's what you call, in the old days, a boner, a little market boner. Little market boner. Paul, I emailed you the link. Boom, 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 boom. Yeah, it's a little bit of a dude. FTX sucks to trade, but it is. You want to see this kind of go up, anyways. It's like good for the economy and all this kind of stuff. Yeah, Paul. I am letting you in. Did you click the link? I don't know what that means. All right, hold on here. Oh, I see it. Boop.
All right, good.
Yo.
All right, I'm in.
Dude. What's going on, stud?
Well, what is that? What's going on with my picture here? I don't know what I did, but
it's kind of cool though. You've got
it does look good. Somehow I'm staring at TC2000 here, but it's behind me, but that's all right.
Yeah, you got some kind of chart in your background. That's not my chart though.
Well, I'm old school. Sometimes technology gets the best of me. But
hey, isn't that kind of weird though? Like, we're Indians and neither one of us is good at technology.
That's true. Doesn't make sense.
This has to be the only occasion where, like, we're Indians and we don't know anything about computers.
We're bucking the trend.
We are bucking the trend. How you doing?
I'm doing good. Enjoying summer. The market's been great, obviously, and just hanging out. Happy to be here with you on the inaugural Trader's Edge.
Hey.
Yeah, what about you? I know you've had a lot going on, and I'm really surprised that you look so awake and energetic. I certainly wasn't when I was at your stage.
That's true. I am an old dad. I'm 43, first-time dad, so I'm an old dad. That's 100%. But I did get lucky. My wife she's very kind about trading. She's the one that'll be like, hey, get up and go make us some money.
Yeah. See,
Sounds like
mine was if I have to be up, you have to be up with me.
oh yeah.
So it sounds like yours lets you sleep.
I mean, usually like I'm already up at kind of 4:35 anyways a lot of
Yeah, that's
days.
right.
So
That's
it's
right.
like, I'm already doing whatever I got to do. So guys, let's get into it. So guys, a lot of people haven't seen Paul for a while. He's usually, he's more hanging out in our chat rooms and stuff like that. But me and him haven't done anything in quite a couple years now. And so
It has, and they're so much fun to do too.
true. So for those of you guys that don't know, Paul is my mentor, and me and Paul, we had met in about 2006. So, man, this is about 20 years ago. Paul was basically, I mean, he was younger than me at that time. So that's actually.
Oh, yeah, I was, back then, jeez. I was in my 20s, somewhere in my 20s. Yeah, early 20s.
Yeah. And I was just coming out of college, and Paul had been running a blog called the Market Speculator Blogspot. So in 2005, 2006, there was no Twitter. There was no Facebook. There was really like nothing, none of that stuff. And so if you wanted to learn how to trade, like it was, I think in a lot of ways, in some ways it was harder because you had a lack of information, but it's also was easier because the information you found, at least it was right. Where like now today, it's like, like every 18-year-old kid is like a trading guru. So you don't really know where to go. But so I saw Paul, he was doing a Market Speculator blog spot, and he was posting swing trades. And, he was posting like always these like kind of aggressive swing trades on things that I was interested in. Like during that time, the Chinese markets were taking off. And so he was posting on like stocks like ACH, which is like the China Aluminum Company. And there were all these kind of stocks that were running around. So I'd always leave comments on his blog because he was Indian. And so I assumed like, because he's Indian, maybe he will teach me someday. And so, I've been leaving comments and comments and comments for, months before I finally worked up the nerve to see if like he would teach me something. And he's like, hey, like I am a lawyer. I play poker. I trade. I've got a full deck here. And I'm like, hey, I'll work on your time. And, we would get together at like 11 or 12 o'clock at night because he's a night owl. And he's like a huge night owl, maybe even to this day. But back then he was a double night owl. And so
from what I remember too, you were super persistent because I don't think I answered the first few emails. It was
nobody back then would answer anything, right? Because there's just like, you also don't have any profile. So like somebody leaves a comment on your blog, you don't have an Instagram, a Facebook, a Twitter, anything to verify even who these people are, right?
Yeah.
And granted, it's like a more trusting society back then. But still, like you have like a little bit of like, I don't know about this. So Paul took me under his wing, and then he taught me for about a year and some change. And then after that, I started I was trading full time. Then I started Bulls on Wall Street, and the rest is history. Then a few years later, he came and joined the party, and we've been together ever since. And so now what happens is, I focus on the day trading side and Paul focuses on the swing trading side, which is actually the style that he taught me. When he taught me, I did 0 day trading. I had a job, I was working as a recruiter. And so I never day traded at all. If I did, it would be in the morning and I'd always lose because, day trading is fucking hard. And so Paul taught me, his style of swing trading, and, that was really what took me over the edge. And I ended up taking all those concepts and just moving it to day trading, like, years later. So when we started Bulls on Wall Street, we didn't do any day trading still. Like when we started Bulls on Wall Street and we had our first chat room, there was no day trading done. We were all just sitting on swing trades and, everybody got bored out of their ass. And so I started day trading just to kind of keep everybody entertained. And then, lo and behold, I really, really liked it. So, Paul, if you don't mind, like, give me a rundown, though, before we just kind of get started with everybody. Give me like just a 2-minute background. We know we know you swing trade, right? But I think a lot of people don't know. Like you're a poker player, you're a lawyer, right?
Right.
And you're a 49ers fan. And I just want to say before we get started, that was the luckiest game the 49ers ever got, beating the Lions.
We did get lucky to get into the Super Bowl, but then we should have won it once we were in. We should have won it once we were in.
That was rough. It ruined. I've been waiting for that day my whole life.
Yeah.
For the Lions go to the Super Bowl. I think a lot of people, even 49ers fans, would have been willing to lose just to see my dream come true.
Right.
And it wasn't.
That was brutal that our two teams were against each other there.
Dan Campbell just had to keep going for it on the 4th downs.
Right.
So
So quick 2-minute rundown. I started trading way back in the late 90s while I was going through law school, and I would do it on the side. Before I actually really delved into trading, I'd already been through just about every market. So it was the big internet boom. For those of you who don't know, what we're seeing right now in AI, we've already seen in other things. There was the big internet boom, late 90s. Had the big run up and rundown, didn't really know what I was doing with my account. And it took blowing up the account two or three times, blowing up the account. But before I said, you know what, I really got to learn what I'm doing. And back then we didn't have access to what we have access to now. So I would literally go to Barnes and Noble's, look at the stock books, which weren't very helpful at the time, and the investing books. But there'd always be a couple of people there, and we'd like chit chat. That was my chat room, basically. Barnes and Noble, or most people weren't trading on the internet. They were trading. You'd have to go either place a trade over the phone, or go to like Charles Schwab, and they'd have terminals there, and you could place your trades in there. So I would go in there, and there'd be a bunch of old heads in there trading, and they'd be giving me tips and stuff. And that's basically was my starting point of really starting to learn. And around 2004, 2005 is when it really started to click for me. So much so that my friends started to figure out that I was doing very well in trading, and that market blogspot, that site that I had that you mentioned where you found me. I started that just to get people off my back, because all my friends, you know how it is, people ask you for stock tips and stuff. And I was like, okay, you know what? I'm going to create this site. Just go there. And lo and behold, that's how you found me. Traded for about 3 or 4 years after that, very seriously, to where it got to the point where I was doing better trading than I was with my job. So for another 2-3 years, I really thought about potentially going full time, which I did in 2012. I think it was around that time, 2013, 2014, where we got together and started Bulls on Wall Street. And essentially that's where we are right now.
That's awesome. So the interesting spot was that Paul taught me, but then he had family and all this stuff going on. So I was living with my parents because I was coming out of college. So I just went full time.
Yeah, right away. Wow. Yeah.
I just went full time. I was like, hey, man, what else we got to do? And so that was in 2008. And then again, we've been friends ever since. And so he's got Paul, give me a rundown of just like your style of trading, because it has evolved a little bit over the last almost 20 years, even since you taught me. A big basis of when you taught me was your pullback setups, but you were doing them on very rowdy stocks back then.
Yeah, and I think in that market, and you really have to have, as a swing trader, you really have to have an adaptable approach, and I figured that out. I think with day trading, it can be a little different. And I day trade now as well. Like you were saying, you sit there on your swing. Once I went full time, you sit there on your swings and you have nothing to do. So the day trading started as filling my time, but now it's kind of an alternative source of income. But you figure out, when we were back in 2006, the market was ramping, especially in these specific areas. You mentioned China. And now that rings a bell now. I can't believe you remember this stuff. I forgot at that point. But yeah, it was China. All of these metal stocks were on fire. And you could trade 2 or 3 setups at all times, breakouts and pullbacks, right? And there came a point where that starts to slow down and it doesn't work. And then you kind of figure things out. And what I realized is you really have to have an adaptable approach. So when someone asks me, what is your favorite setup or what is your style? it can be a little frustrating for people because I say, I don't have a favorite setup. My favorite setup is whatever's working in the market right now. So I use a really adaptable approach that starts with analyzing the overall market. And you guys, I recognize some faces here. You guys know, whether you're a report member or you've been to some of the Saturday coffee and stocks we do, that we always start with what is the market doing right now. And that's not necessarily going to make us money in the moment in terms of a potential trade, but it kind of sets the tone for the types of setups we want to trade, the types of stocks we want to trade. And it's this top-down approach. So the top is the market. Then we drill down to the industries. And once we've done that market analysis, the industry analysis, I know now, okay, what types of setups do I want to trade related to that? Because we've got a basket of 40 or 50 different setups we trade. But they're not all working at the appropriate time. So we have to know which one do we pull out to potentially trade. It helps us decide how cautious or how aggressive we want to be with our trades. You're not always 100% of your portfolio, in play for swings. Sometimes it's only 10 or 20%. Sometimes you're going on margin and going more than 100%. So it's going to help dictate with that. It allows you to know how much risk you should be taking. So we start at that point. From there, we drill down to the setups, and then we start getting into stocks and stock picking and the potential trades we're going to take. So that's kind of on a macro level, how we approach swing trading.
And that makes a lot of sense. Like, for those of you guys, for in layman's terms, like what Paul's essentially saying is like, there's different market cycles. So there's 4 market cycles. You have run up, run down, or basically it's bull market, bear market. Then you have an accumulation and a distribution phase in the market. And so what ends up happening is, when the markets shift, your style has to also shift. In case in point, like I had friends of mine in 2021 post-COVID that had made literally like millions of dollars trading stocks, more than I did, because I, trade properly, but in a wild market, sometimes the wildest people will make the most money. And then what happened is, like, when the market shifted, and so, we ended up with a big kind of distribution phase in the end of 2021, going into January 2022, and then the market shifted. And so all the high speculative stocks that were going all died. Actually, many of them just went to zero. So if you think about like SPACs, right? SPACs were like really, really hot. How many SPACs are left?
Yeah, you don't hear that term at all anymore.
DraftKings is the only one that I saw that was a SPAC that turned into a company. Like, there's a handful of them, right? But none of them. There was an Indian guy who he gave us a bad name. I think he's Sri Lankan though, but that Chamath, and he was like next Warren Buffett, because he was launching all these SPACs, and they were all alternative energy SPACs. And what did they all do? They all literally are at zero, or 10 cents or whatever. I mean, I don't even know. RMO doesn't trade anymore. Excel doesn't trade anymore. Arrival, I used to trade this one. I mean, it's obviously it's 5 pennies from 2000, right? So, Lucid, Rivian, you name it. I mean, there's just a million stocks that happen. So, what Paul's essentially saying is, the setups change. And the reason the setups change is because when you have like the post-COVID market, it's not as wild as like the Chinese markets in 2006, 2007, 2008, but there was like the semblances of that. Stocks gapping up intraday. When Paul was teaching me the Chinese run was happening, their stocks would actually gap in the middle of the day. Sometimes there'd be so much buying, like it'd just be, you'd have a lag in telechart. And so there'd be like an actual gap, like on the 5-minute charts. And there was so much buying going on. And so when you have this, you're going to trade a certain way. And then, of course, when the markets start to shift, right, everything starts to change. You can't do those setups anymore. And so where people typically blow up their accounts is when the cycle shifts, and it subtly shifts over time, then most people are just not prepared for that, because what they're doing is they got bad habits. When the market is like this, you can make so much money, and you can oftentimes like do the stupidest shit. You can average down. Dude, you could trade you can be boozing in trade. You can average down. You can oversize. You can do anything that you want to do, and it's all going to work, right? And so when that market shifts, like all of a sudden the swing setups start to change. And that's what he's talking about, is like you have a basket of trades, but they only work in certain situations. And so you have to always switch everything depending on the market cycle.
And related to those market shifts, they don't come out of nowhere. If you really know what to look for, you can see them as they're happening, or at least get a little bit of an edge or a clue that it's happening. We might be in the midst of a little bit of a market shift right now and potential rotation into different areas.
Time out. The dreaded market rotation has been something spoken about, whispered about, rumored about for months and months and months. And it hasn't happened yet. Are you thinking it's time?
So we're always on the lookout for these things. It doesn't mean it's going to happen or that it's happening right now, but we should definitely be prepared for it. And if it does happen, I think it's going to be a very good thing for us as swing traders, because some of these areas that have been a little beat down are going to give us really good opportunities.
Such as?
Let me see if I can, I got to figure out how to share my screen real quick.
There should be something. It's like next to the video button.
All right, here we go. Are you guys seeing my TC2000 now?
Hold on. I gotta just click this button. Bam.
Okay, you got it. So let's take a look at the area in tech. There's essentially two areas in tech that have been really working throughout this year. That's big tech, of course, and we still have a bunch of the big techs hitting new highs today. Google, if we look at Google hit new highs. But semiconductors, which is very tied to AI, and we know AI has been at the forefront right now. If we look at AI, the ETF SMH was essentially the semiconductor ETF. We can see, first of all, it's very extreme. And just about every time in its history, when it gets this extreme, we get a hard pullback. On top of that, if you look historically, semiconductors specifically tend to lag in the summer months. Like if you look at SMH, you're going to see, if we pull this thing out on the weekly, we see this huge run. But just about every one of these summers, we've seen consolidation or pullbacks during the summer months. Here's 2021. We saw it in 2022. We saw it in 2023. Beginning and end of the year is where we see the big runs in semiconductors historically. So we've got that telling us that this hot market has potential to slow down. We have the fact that it's super extended, and there's a lot of different ways we can look at how an area is extended. We can use all these fancy indicators, and Kunal, back in the day, I used to be really, really into all these indicators.
You loved indicators.
My trading's evolved a little bit now, where I really like to eyeball things. And if I pull this thing out, and what I like to do is look at, my screen's freezing up here. Okay, there we go. If you look at SMH and pull this thing out, you'll notice that every time it pulled back, just look at the distance between the moving averages and price action, and you start to see these really wide gaps. And that's where we get these big pullbacks. And we're seeing that right now. Look at how extended semiconductors have gotten compared to their 50-day moving average, compared to their 200-day moving average. Now, that's not predicting that it's going to pull back right now, but it is a signal we should be cautious, maybe start looking at some other areas, or even potentially putting on some shorts in select stocks in this area. It's even more extreme if we look at the dailies. I had it on the weekly here. And we can see here, look at throughout this trend. If we just pull this thing out back to 2024, semiconductors basically rarely ever even pulled back to the 50-day moving average. If they could just stick to the 9 EMA, that was a very good buying opportunity. That might be changing here. We've actually blown through the 9 EMA, and now we're watching very closely. I actually mentioned this in the report today. We're going to watch this very closely. If it remounts the 9 EMA, we're right back on trend, and this analysis we throw out the window. And that's part of that adaptability is we have these hypotheses, but that doesn't mean we're just going to guess and jump on them. We want to see them confirmed. So if we get the remount of the 9 EMA, we're going to jump back in. If we break below this range right here, which is the previous candle, we can potentially think about shorting this area, which, through this 2024 run, I would never have thought of shorting here. But now we're at that spot where maybe we're seeing rotation. We notice here a lot of volume is coming in on the negative side, distribution. We're always looking for distributive or accumulation, which simply is, if you're new to this, if you just pull this thing out, when you see the big red candles, that's essentially distribution. There's more sellers than buyers. When we see big green candles, we're seeing more accumulation or a lot of buying. And we are seeing a lot of selling in this area. And this is going to be reflected in the stocks in this area too. The leader obviously has been NVIDIA, which looks very much like the semiconductor ETF. But if we look at some of the other big guys, we've already seen them start to fall off. And that's another thing we look for. The leaders are going to lead, but slowly we start to see some of the other players falling off before the leaders do, if we're looking for clues. A good example of that would be AMD here, which has been a leader. And ever since it topped here, it started lagging way before the ETF and NVIDIA has. And we could pull up a number of these stocks. Look at Intel here. Look at Intel here dropping off here. Same thing. And there are a number of semiconductor stocks that have already actually broken the trend that we haven't actually seen in the ETF right now. So
hey, Paul, go ahead. Do you look at Intel and think of it as like old Ford Motor Company and like think like, is that even part of the space anymore?
So I don't. First of all, I want to.
Huge company, sure.
First of all, I want to talk about Ford in a second. I actually had that as one of my talking points today. I can't believe you mentioned that, because I think Ford might be one of the next big momentum stocks, which sounds crazy, right? But you'll see in a second. But going back to this, I have not traded Intel maybe in 10 years. So not necessarily as a trade, but we still analyze these things for clues of what's going on in the industry, right? So yeah, IBM, Intel, Cisco, I can't remember the last time I traded these things, but I still watch them because they do give us clues, because the institutions do trade these things, right?
Hey, and you know what? There is something like Oracle, I always coupled with Cisco.
Yeah, right.
It's flying. So, they can shift a little bit. They can shift a little bit, but you're totally right. Like AMD, I've slammed my nuts in a drawer 50 times on that thing lately. Day trading it. Yeah. Because every time I seen, for a while, like I'd seen the video go, and you look for the sympathy play. And so I'd play AMD and it'd be like,
it's just not there. And that's the clue that, this was a buy the pullback kind of stock, but we've got enough clues now that have told us the pullbacks aren't going to work with this stock. And if it starts working again, of course, we'll trade it. But for now, for me, pullback plays are out the window for AMD. Maybe we'll get them in NVIDIA, but we're using that analysis we just did with semiconductors to say we're going to be a little more patient here. If NVIDIA proves itself again, remounts the 9 EMA, we can get back into the trend plays. But for now, we want to be cautious and look to some other areas where we're seeing subtle signs of rotation, because there's only a fixed amount of money in the market. Sometimes there's a little more, a little less. But essentially what the institutions are doing is they're just moving it around to different areas, right? And it really feels like, at least short term, we're seeing that money pouring out of semiconductors and into some other areas.
Hey, now, Paul, let me ask you something about this. I think we all probably kind of did this a little bit. We underestimated a little bit the power of this AI push, right? Because nobody really, everybody thought it was 5 years out, and it might be 5 years out. But the stocks took off. And I thought the tricky part of the whole AI theme was that there have been zero AI companies, right? Like, hey, this stock does AI. This stock makes robots, right? It's just been in semiconductors and then Microsoft and Google and so on and so forth. And so I thought the AI theme caught a lot of people off guard, because there wasn't necessarily like a specific AI company, right? Like Microsoft has a million things.
This AI trend has been a lot different than some other trends, because with a lot of the trends, whatever it is, there are specific stocks that are essentially playing that trend, right?
Sure.
And with this trend, yeah, you're right. There aren't a lot of AI type stocks. We have a AI list that we've made, and if you look at what we could call like pure potential AI plays, they actually have lagged some of these other companies. But the AI plays are essentially what we've been trading for a while. Semiconductors or big tech, right? And some of the medical device companies as well, like say ISRG is heavy in AI, and you can see it's leading as well. So what you have to do for the AI trend is figure out which of these big companies are leading the AI space. And that's why NVIDIA is on fire, right? NVIDIA had been lagging for a while. But once the AI boom started, that's where it really took off. Apple had been lagging because Apple, no one really knew. They weren't talking about, let's pull up Apple here. And is my screen still being shared?
Yeah.
Okay. If we look at Apple here, Apple was lagging the other big tech for a while here. We can see here, since 2021, it was basically trading in this range, while a lot of the other big techs were just flying, right? And then a little about AI, no one knew what they were doing. And then just a couple, was it last week or the week before, it had its biggest move in I think it was 5 or 6 years, because they finally talked about their AI strategy, and now they're taking the lead. So you really have to investigate these stocks and figure out which ones are taking the lead in AI, and those are our AI plays essentially.
Yeah, and of course, at some point, some other ones will pop up, but we just haven't seen it just yet. Well, it's been settings and
I think what's happening is they do pop up, but then the big guys buy them out very quickly.
That's probably happening too.
Yeah.
So how do you? Let me ask you this, because I struggle with, because obviously the runs have been bigger than in my brain what I have, right? Like even Google moved 3% today. Like Google never moves 3% today, right?
Yeah.
So like you underestimate sometimes the depth of how much things can move. So do you take like past themes? We've had past themes before. We had a huge solar theme a few years ago. We've had big oil runs. Heck, I mean, bird flu stocks, right? Like, we've had different themes over the years, some that last for just weeks and some that last for, very, very long time. Do you ever like go back and try to think like, okay, when solars first started picking up steam, right? I think it was like, right, but a handful of just a few years now, they're all in the shitter, right? But like for example, SETIG was is $26, but before Biden won, right, it was also at $26 and it went to 400, right?
Right.
So people always think the AI theme is like some unique thing, right? Like, oh my gosh, these companies are going nuts. We have themes every year or two, and oftentimes big ones, Bitcoin stocks theme, right? When not right now, but like the first time Bitcoin started to run, the stocks like Mara and Riot were $100, right?
Right.
So you have themes all the time. So do you ever kind of like think back and say like, use those as kind of examples to get a gauge of where things can go?
Right. We're constantly studying chart patterns, right? And when you've been trading as long as we have, we've seen these cycles over and over and over again. So it is essentially, trading becomes like the same thing you've seen a million times. And I think what you have to be cautious of is thinking, this time's different, or, getting caught up in the emotion of these themes and taking, I wouldn't say a cautious approach, maybe a slightly more conservative approach. You mentioned a little while ago that some of your students were making way more than you during that period, right?
Well,
you were doing well, but you had students who had never been through this before, are willing to risk a lot. And you might give up a little bit here to protect yourself, right? And over time, you're still going to be in the game. Well, maybe others aren't when they, get crushed by taking on bigger risks. So a little more caution in some of these themes, and looking out for the things, after we have, like you were saying, studying past things. There are things to look for to know when the runs are potentially over. We mentioned distribution patterns. When you start to see, negative volume coming in at extended levels, When you start to see volatility really increasing, when something is already super extended, we've seen that in just about every one of these themes. That's usually when you know the run, at least short term, is over. So we have specific themes we're looking for. I will say this AI theme right now feels a little different because of what we mentioned before, because it's not just these out of nowhere companies that we had never heard of all of a sudden ramping up. It's the big guys, right? The NVIDIAs, the Googles, it's these guys. So I think we can treat this one a little bit different, but it is a lot of the same stuff we've seen over and over again. And studying those past markets helps you trade the current market, because nothing ever really changes. They've said for years, right, that the algos and all this other stuff was supposed to change, but all this stuff, the same stuff we saw 20 years ago is happening now.
And guys, one thing I just point out is, like, for example, we all thought, everybody thought, unless you're just 90% people thought 4 years ago, right? Like, climate change was a huge topic. It still is a huge topic. It's a bigger topic now. It's fucking hot as balls, right? It's a bigger topic now. But what happened to all the climate change stocks? They crashed. They're nowhere, right? In 2019, 2020, right? Every EV company was taking off, and it felt real. It really did in the moment. I'd sit there and look at Arrival and be like, man, electric delivery buses?
Yeah.
That's genius, right? Like, man, my Amazon guy wastes so much damn money bringing me 2 packages every day. If he had an electric vehicle, it'd be huge, right? And Tesla was the only EV company. And so all these other ones would come out and it'd be like Lucid, $80, Rivian, $200, right? Arrival, hundreds of dollars, Excel, $80, RMO, $50. And those companies are not even around anymore. And so these companies all went just nuts. And it felt real. And people were looking for, like, at that time, any type of company that fit that theme. I mean, it would be like, there would be companies like, oh, we make energy from ocean waves. Boom, straight up. Plug, Butt Plug. Butt Plug is a stock that's been around forever. They're not actually even an alternative energy. They do all sorts of weird stuff and have some weird hydrogen batteries and stuff like that. And they start going up. And BLDP and all of these kind of companies just went nuts, following Tesla's lead. And it felt real. Like, it felt real. But the thing is, it just wasn't there yet. Now we know, okay, the technology is just not there yet, or the adaptation is not there yet, or it just got overbought, right? And, the metrics just don't work after a certain time. Once you go up so much, and once a company's worth 50, 60, 70 billion dollars and makes negative money and has no chance of making money, right? Then, all of a sudden things change. And so even the crappy battery companies like F-Cell, where it went to $30 back then. And so it always feels like this when you have a run in a sector. And, we're seeing this with AI. And yeah, it's probably real. So what? But at some point, we've seen themes a million times. And they always feel like, at least for me, I'm an optimist. So it's like, for me, they always feel like it's something. When the solars were running, I'm like, man, solar power is great. I should put some on my car. I should put some on my house, right? Like, like you start thinking these things. And even if everybody does, the stocks may take a shitter. And we see that with solar companies now, right? Like, besides FSLR, is there any solar company in the world that's over $50 anymore?
Yeah. But you in the moment, it feels like that, but you've been through this so many times. You've seen this cycle so many times that eventually it's going to crash. So you have to be prepared for that. We talked about Ford before, and you were just mentioning the electric car companies. I was going to talk about this anyway, so this is a good time as any. You were talking about Tesla and NIO. If we didn't have the tickers here, and I showed you GM and I showed you Tesla, just the charts, you would probably think this is GM and the other one was Tesla. but it's the exact opposite right now. These old legacy companies that were getting crushed when Tesla was coming up, when Neo's still around, when Neo was making its big run. We can pull up Neo here, and it felt like, GM and Ford were done, that all these electric companies were going to take over. Look at the huge run Neo had during this period, the huge run Tesla had in this period. And now we're seeing the exact opposite. The legacy companies are coming back. They're catching up with electric, and we see GM here. This looks like a kind of a momentum stock right now. In 2024, it's been one of the leaders. And compare that to Tesla, which looks like just the stock trading in a range. Neo is getting crushed now. And this is part of that rotation, like knowing where to, what's trending, what's not. We can look at Ferrari, which kind of still is a legacy company, and it was getting crushed for a while, but Ferrari has been on fire, and they just announced their new electric car. So we're seeing a shift just even within the auto space between these high-flying tech kind of electric companies that are now, I wouldn't say nothing companies. Tesla still, got a huge market cap, but they're lagging severely in 2024 compared to GM. So, if I told you like I'm trading GM, you'd probably like, why are you trading that? But that is the momentum play right now, not Tesla.
Nice. So give me the rundown. You were saying you kind of like this Ford. Give me the setup. Give me the setup.
I actually think GM is better than Ford right now, but let's pull up Ford. So if we look at Ford, even now, and the reason I mentioned Ford is because it's not as clear. Like GM has already done it, right? Notice here, GM had a nice run, had pulled back, and for about 2 years was in this consolidation phase, and just now broke out. And when we talk about clues, you see all this good accumulation now, but while it was in this kind of range-bound phase, we saw subtle signs that the institutions were starting to pick up on this, and we see the breakout. So now if we look at Ford, we're basically seeing it where GM was a few months ago. So this is, we talked about sympathy plays. I think we have potential for the sympathy play in Ford. It's in that exact same consolidation range that GM was. It went through this distribution phase here, and now if we look at it more near term, we're starting to see an uptick in accumulation. These big green candles, here's the average volume. We're seeing more big green candles. I don't know if we have time to teach how to analyze this right now, but this is a CMF or money flow indicator, which essentially
teach us. I actually don't even know what this one is.
Yeah. So the CMF indicator, it calculates the relationship between price and volume. And when we start to see it spending more time above the zero line, that's usually indicating accumulation. And that's what we've been seeing recently. Whereas before, it spent a lot of time way down here, and we wanted to stay away from it. So we're seeing subtle signs that Ford is going to follow what GM has already done. And historically, they tend to travel together in terms of what they do with their price action. So I'm watching Ford very closely. I'm not in it right now. And of course, if it were to start to pull back here, I wouldn't touch it. But if it starts to break out here, it's a stock that's seems like nothing right now, but I think it's ready for a big run.
So give me a rundown. What would you have to see? What would you have to see before you get interested in this? Because that's always the catch-22. Because theoretically, oftentimes by the time the breakout hits, like say you were like the breakout's $14, right? You might be already a little bit long in the tooth.
Well, this thing has been so beaten down in a range that if it breaks out, let's say it's at 12 right now, one thing I want to see is it to get up and stay over the 50-day moving average. And I want to see, you see the 50-day moving average is kind of in a downtrend here. I want to see it start to curl up. And let's say it broke out here and got up to, 13. There's still a ton of room to the upside. Whereas if we see a breakout in the middle of a range or near the top of the range, we want to stay away from those. But I actually want to see a breakout here. So get up above the 50-day moving average, start to see a trend change, and start to see volumes start to improve, continue to improve as well. and that
Hey,
would get
Paul,
me
let
in
me
the
ask you
stock.
a question because I notice this a lot, and I wonder about this myself. People draw, when people think of breakouts, they're thinking like trend lines, trend lines, trend lines. Of course, you have diagonal. Then you have kind of like made up ones where you're just connecting dots, which I think actually
Yeah.
happens a lot, right? Then you just have like your straight horizontal resistance where there's price levels.
Yeah.
I mean, is there something that's really reliable and things that you kind of think are a little bit made up?
Yeah, I don't do a lot of trend line stuff. What I like to do is
I
follow
agree
the
with you.
yeah,
I think
'cause
sometimes if you really want to believe in a stock,
yeah.
you can invent trend lines everywhere.
Right. And trend lines, yeah, exactly. It's like they're not real, right? So I want to follow what's real, and what's real, there's only one thing, and that's price action, right? So when I see a breakout, I want to see a break out of a range. You hear me say that. You'll hear me say that a lot, because this is all real buying and selling. We could draw a trend line from here to here. There was no actual buying and selling here, right? It's just a trend that maybe people are looking at. This is actual buying and selling. And when we break one of those ranges, that's where you're breaking out of a supply zone. There's nothing above you, and the stock can move. So there's essentially two things. One is real, which is price action. So I want to see breaks out of a range. Now, sometimes if we break a downtrend, a clear downtrend, not necessarily a trend line, but where we've seen the stock actually trend lower, higher, lower highs continually. If we break that trend, oftentimes we'll get a strong push in the stock. So those are what I would call like direct or real things. I also look at moving averages. Now, moving averages are self-fulfilling type prophecies in the sense that they're not real. They're just calculations of what the stock has done over the 50 days, but it doesn't actually mean there was a lot of buying and selling at that level. But that is something real in the sense that everybody is watching it, right? The institutions are watching those levels, traders are watching those levels, and traders are making decisions around those levels. So number one, first and foremost, is price action. And then number two is the key moving averages. Those are the two things we're looking for in terms of breakouts.
Hey, Paul, so let's take a look at this because I just saw, I'm kind of interested in this now. So I want to get your opinion. So Rivian just had a PR out. They got $5 billion from Volkswagen. So
I wasn't even aware of that. No.
You may have to add your post-market data on. It just came out like a little bit ago.
Oh, wow. Yeah. Oh, so that was literally while we've been talking here.
Yeah.
Yeah, I can see it here. Yeah. So it closed at almost 12 today, and it's after hours up at 17.
You may have to add your post-market data on. If you go to
I can see the blue line here. Yeah. So it's trading at 17 right now.
Yeah. So what would you give me a rundown? Like if you saw something like this, right? Because in general, this one, obviously you can't just buy it right now, right? But like when you see something like this, where you have the level, right? Now you have the levels and all this kind of stuff. And it's also been in a big range and beaten down. And probably a much low, a little bit of a low float. How would you play something like this? Obviously day traders can day trade something, but if you're a swing trader, like what do you do for something like this?
So this is actually amazing that this happened while we were talking because it illustrates a lot of good points here. So first of all, beaten down stock, right? Electric cars. We were just talking about, GM and Ford and Ferrari, the legacy plays kind of beating out these areas now. And now you have kind of a legacy. You said the news was Volkswagen investing in RIVN or buyout.
Yeah, it looks like they invested about $5 billion.
Okay, so it becomes kind of a legacy play again because now they have the investment from Volkswagen, right?
Yeah, and it's
so one of the things we want to do is when we see this kind of breakout, and we want to investigate what is the news, right? We're mostly technical traders, and we don't go really deep into the news. Get into the weeds, but enough to know the headline. Okay, Volkswagen, a legacy play is putting money into it. That's a good thing for the company, right? So I would call this catalyst kind of a real catalyst or a direct catalyst versus something that's, sometimes you'll get these big breakouts on rumor or something that's not kind of an indirect catalyst, and those are more bound to fail, right?
Sure.
So point number one, the news is good. So this breakout makes sense. Now let's forget about the breakout and just analyze what had been happening before. And we've talked about this before. There are always insiders who are kind of in the know, right? So this Volkswagen Rivian thing didn't come out of nowhere. People talk, and behind the scenes, people are in the know. They shouldn't, but that's the way it works, right? And I think that, like, looking at this now, we kind of see a subtle shift that there were people in the know already. Look at the CMF indicator that we were just talking about. Look at how it exploded for no reason over the last month. So obviously there was some buying coming in for this news event. That's the way I look at it. It might sound kind of like a conspiracy theory, but it's the way the markets work, right? So we see here that there already was some position building in here. So that's a positive for us. We know the news is good. We see that there already has been some position building. And on top of that, those key type levels we were talking about, this breakout is breaking over those levels, right? Breaking out, it was moved up over the 50-day moving average. This breakout, if it holds in the morning tomorrow, will be up over the 200-day moving average as well. So this is the exact type of breakout I want to see when I'm looking at potentially trading a breakout. Now, in terms of as a swing trader, actually jumping into the stock tomorrow,
probably. What would you need to see in the coming?
Probably,
it's very rare we buy the same day of news if it's up.
Yeah, so swing trading is a little different than, say, day trading, where day trading you get that instant gratification, and like you're gonna, right? It's gonna be moving. You get that intraday volatility. You'll be able to day trade it. As a swing trader, you have to be more patient. We have a basket of a number of different setups. We trade breakouts, and we may have to wait a few days. We might have to wait a few weeks before we actually get one of those patterns emerge. So there's a number of different patterns. We could, it could break out, and if it breaks out big, maybe it consolidates for a while, and we wait for a pullback to potentially trade. It could consolidate near the top of the range, and if it breaks that range, we could trade the breakout of that range. So there's a number of different ways we could trade it. The one spot, and I believe Rivian is heavily shorted. Do you happen to have the short interest on it?
Yeah, let me look it up here. I got it here somewhere.
So my general rule is not to enter a swing on the day of the breakout. But if the stock is heavily shorted and all these other good factors are in play, I might jump in on that day because you get the benefit of a potential short squeeze.
Let's see. I found it. Hold on here.
If it's up over like 10%, I would consider entering it.
So tomorrow. What's your sweet spot on short interest? So let's take a look here. So we got.
I like it if the float percentage is above 10%, we'll consider that heavily shorted.
So if we look here, you got Rivian, short float 133 million shares out of the float of 700 million. So the short interest is.
I'll pull it up on FinViz here.
Yeah, we got 18% of the float that's shorted.
Okay, so that's heavily short. So I actually would consider entering this tomorrow, assuming you can get in before a big move would happen after the open. If it opens at 17 and by you're looking at the middle of the day, it's already at 19 or 20, then I wouldn't enter. But if you can enter near where it opened, I would consider entering with that kind of short interest and all these other factors we talked about.
Cool. And if you can't be at the computer, like what's like your kind of go-to? Like you wait for a consolidation or a pullback? I know you got a lot of different setups, but like
for this specifically, or just your general interest?
In general, like if you have a piece of news out, right?
Yeah. So
Rivian, it could be earnings like an Adobe. MU has earnings out tomorrow, right? Like you have these like kind of stocks with earnings out. What would be your kind of go-to? What would be your like go-to setup? What would be nice to see?
Yeah. So, what I did for years when I was working full time is, in the evening or in the morning, you build a list of 10 to 20 focus list stocks. And we actually do this in the report still, where we have a list of 10 to 20 stocks that we're watching. For each one of those stocks, like, the hard work comes in before you actually enter the trade.
Sure.
And we could already plan this for Rivian, right? Where you're looking at a stock, you have a potential entry, a setup you're looking for, whether it's a pullback play, whether it's a breakout play over a specific range. So you have, in general, like, with Rivian, say, it's at 1660 right now, and I want to make sure I enter somewhere between 16 and 17. So I'll set an alert either through my broker. You can do it through TC2000. TC2000 will actually send you a text when it hits that range of price action you're looking for.
Sure.
And I've already got in play, this is the amount of shares I'm going to take. This is where my stop's going to be. This is about where my target is going to be. So all that hard work is already over. When you place a trade, it's very simple. So essentially just hitting, you have your analysis done. And if the stock hits that range you're looking for, I'll place a trade.
Nice. Hey, let me ask you one question, because, we get a lot of students that do this. I learned this setup from you. And I've changed the parameters of the setup have changed on my end because I'm day trading them a lot, but I learned the setup from you. So you taught me a rubber band setup.
Right.
A rubber band setup is a counter trend setup. I see Arvin in here. Arvin is one of our students. She's from Canada. She's one of our people, though. She loves rubber band setups.
Oh, yeah.
Like, give me an idea. When you see a rubber band setup, for example, when we see them every day, right? So it's like, like I thought this NNE was a rubber band setup, right? Give me a rundown. Like, what are, you don't do them. When you taught me, we don't do these on these kind of stocks necessarily.
It's very risky to hold these type of stock. Yeah, NNE.
We would do it more on something like this. But give me the parameters of the rubber band setup.
Okay, are we talking about it to the upside or the downside?
To the downside. Everybody's a short seller these days.
So something that's really beaten down, right?
So what we're looking for is rubber band short. So give me your parameters on the rubber band short. So for me, for what I recall and how I teach it still is, candle piercing the top of the Bollinger Band. Right. 80 stochastics is a minimum, but 90 plus is ideal.
Yeah, right.
And then there's a handful of anecdotal things that, you like to see. What do you like to see? Because I know we saw one in NVIDIA. We did on the day trading set in MU. I thought MU was a really good rubber band setup on the more of the safer side of stocks, not versus the small caps.
Right. Okay. Is my screen showing up here?
Yeah, let me flip it back. Hold on.
So I'm going to create one of my patented ugly drawings here.
Yeah.
That'll help illustrate it. All right. What are you guys seeing right now? Are you seeing this white screen here?
Hold on. I got to just let you share yours. Let me get rid of mine. Now you do. All right.
Yours. There we go. Okay. So we're talking about the rubber band setup. The rubber band setup can be when a stock is really beaten down and you're going to go long. We're talking about a stock that has gone parabolic and we're looking to short it, right? So what we're looking for in almost all of these big moves, there's a reason the stock is moving, right? And it's usually a good reason. So, we're looking at NVIDIA right now. NVIDIA, obviously there's good reason for it. It's a leader in the AI field, but there comes a point where the price action just becomes outrageous, insanity. And essentially when kind of quote unquote dumb money starts coming in, that's what we look for. So if we think of a stock that maybe has been trading in this range for a while, gets some good news, and starts to break out, say like Rivian today is getting news and is starting to break out. In the beginning, we're trading it as either a breakout play or we're looking for continuation patterns to the long side. But at some point when the stock becomes parabolic, I look for these steep moves going almost straight up that get really extreme. You mentioned Bollinger Bands and stochastics. Bollinger Bands and stochastics are measuring essentially the same thing, rate of change in price action. So use one or the other, whichever one you like. I use stochastics, and you mentioned 90. That's a good number for it. Technical analysis books, like the classic books, will say 70 is overbought. but we're looking for extreme, right? So when something gets nuts and extreme, and 90 is kind of the number we're looking for. So when we start to see that, stochastics getting really extreme, and then what we talked about for, let's say this dotted line I'm drawing is the moving average, and price action start, you see this really wide gap. And then on top of that, we start to see added volatility at extreme levels. That's where I start looking for the potential rubber band setup. So at that point, I'm watching for it, and my expectation is it's going to come, and we're going to see a big drop. But what you don't want to happen is get caught in front of it, right? And we never really know how far these things are going to go until we get that signal. And that signal is essentially a reversal candle, something showing it that it can't support that price action anymore. And we have those classic candle patterns. If we see something like an inverted hammer like this, would be a 1 candle pattern. A 2 candle pattern would be a bearish engulfing like this, where we had a positive candle and a candle where it looked like we were breaking out but couldn't support it and pulled back here. And there's some other candles. Essentially, you know it when you see it. You see price starting to fail at these extreme levels. And we just saw that in NVIDIA. Let me pull up the chart. You should be seeing TC2000 now. And essentially what I drew is, what I was drawing is kind of the classic template for that. And if we look at the price action in NVIDIA, that's exactly what we saw, right? We saw a good breakout for valid reasons. But at some point here, it started to get super extreme. Stochastics, the green line here is 90. We saw stochastics get up to about 24. And then reversal candle, the bearish engulfing candle we drew. Oh. So right here is your classic signal. It doesn't get more textbook than this.
Now so you've taken the Bollinger Bands off your charts a little bit, I've noticed.
Yeah,
I didn't get this update.
No, Bollinger Bands are valid and I love them, but if you're using stochastic, if you're doing stochastics, you don't need Bollinger Band, and vice versa. If you're using Bollinger Bands, you don't need stochastics. They're measuring the same thing. So pick one or the other. One is not better than the other. The only reason I use stochastics is it just makes my chart a little cleaner. And I think,
but it's like kind of cool. Like when you add a couple extra indicators, it just makes you seem so smart.
It looks nice. Like,
yeah. Look at me. I got indicators for days. I know things by my course.
Right. So this was textbook here. Exactly what we drew is kind of a textbook pattern. NVIDIA showed us that here. And perfect short set up here at 130, sitting at it's already gone down 12 points. Now, if I was still in this, I would be a little concerned about today's price action. I'd probably put a trailing stop just above the 9 EMA, and if that holds, maybe we get follow through. But you want to protect some of that profit here, and I'd probably already be taking some partials. And we'll see what it ends up doing. Another thing related to NVIDIA, not really related to that textbook technical analysis we're seeing, but you see here where there was the 10-to-1 split.
Sure.
That was a good indication that this run, we might see a pullback in this run here.
Why is that?
Splits usually are not that big of a deal, say if it's 2-to-1 or 3-to-1. But when you think about what NVIDIA was doing here, the stock's trading at 126 now. It was trading at like 1200 before the split, right? Mm-hmm. And for a while, NVIDIA didn't care because it was, they were still getting a lot of institutional buying. But when the stock is getting this extended, institutions are going to start saying it's not a good value here. We're not putting more money into NVIDIA. So what does NVIDIA need? They need retail traders. And retail traders don't want to be buying at $1,200 a share, right? Even though it makes no difference whether you buy 5 shares at $1,200 or 500 shares at 50. It doesn't matter if you get a 20-30% gain, but it's still tough. But mentally, it feels different, right?
It does. Look, I've traded my whole adult life now. I've missed this whole run in Chipotle because
it's trading over 1,000, right?
It's 3,000, and it has no volume. It's like 400,000 shares,
right?
Granted, you're only trading 10 shares at a time or 30 shares at a time or whatever, but it's
but
so thin when it's
a
that
50% move is a 50% move either way,
is.
right? So, but so related to NVIDIA, when that 10-to-1 split, which was so extreme, that was an indication. We actually talked about it in the report that be on the lookout now for that short setup, because this is a clue that NVIDIA wants the price way down so they get retail traders trying to come in, because the institutional investment is slowing down now.
Do you think Chipotle then is something we should be looking at for a potential short? Look at this fucking thing.
It did have that big reversal candle here, but we have to take this reversal candle with a little bit of a grain of salt. Friday was options expiration. It was a triple witching.
Yeah, it was a
so for those of you who aren't familiar, and we don't have to get in the weeds of options, just know that when multiple options expire on the same day, it's called triple witching. And oftentimes you get these really weird price action moves that really don't mean much. So normally I would look at this and say, wow, that's concerning, and maybe we should be watching very closely for a potential short. But if I see another day like that, I'll put more weight to this, but right now I'm not. And overall accumulation is still good in Chipotle. So I am still looking at this as kind of a buy the dip play, and we're getting a little bit of confirmation today as it rebounded 90 MA. But if it had another day like that, or if it were to break down below the 50-day moving average, then I would start looking at it as a potential short.
The real question is, let's see what kind of Indian you really are.
Okay.
Are you a Chipotle fan or a Taco Bell fan?
Oh, Taco Bell all the way. Taco
exactly.
Bell. There you go.
I can't believe this Taco Bell stock is not $3,000.
Yeah, I'm not going to pay $1.50 for guac. Come on.
No. When I go to Chipotle's, I got to get double meats. I got to get double all this stuff. It's like $30.
Yeah.
You can
those burritos are like 1,500 calories. It's crazy.
Yeah, you can have yourself a party at Taco Bell for that. Why is Taco Bell not $3,000? It just boggles my mind. And Chipotle was even doing the E. coli to people. So you got people that don't even wash their hands.
Right. It came back strong from that. Yeah. But speaking of Chipotle, we talked about sector rotation, and obviously big tech, semiconductors, they had become that kind of flight to safety, because right now the Fed is kind of controlling everything, right? And we're waiting for the interest rate cut. We're waiting for the inflation numbers to go down. So we're starting to see now, as the last two inflation numbers came in really good, positive, the way we wanted to see them, the PPI and the CPI. And we don't have to analyze and know exactly what all that means. We just should know that we want to see these numbers come in better than expectations, which they did. This lends itself to the market thinking now that potentially the rate cut is finally going to come either in September or after that. Because of that, we're starting to see rotation into retail, essentially consumer discretionary. So retail, restaurants, travel booking. So we're, over in the swing report, we're watching these areas very closely. And I'll just pull up a few stocks here. MMYT is travel booking, and look at how strong this thing has been. And no one's really talking about it, but we have seen money starting to come into these areas. The retail apparel stores, specialty retail, which had been getting crushed for a while, have been on fire lately. So, here's Abercrombie, and we see money coming into here.
Let me ask you this. So, this Abercrombie's gone up. This Abercrombie's gone up more than all the chip stocks besides NVIDIA. Why is nobody ever? Why do you think? Because back in the day, we used to be on the hunt. So now, I admit myself too. There's not as much scanning that gets done. I still just do my scans and do the process because it's my process. But the old days, where you did the deep dive on Sundays, you would go through every single stock in the NASDAQ, the S&P 500, the IWM. You do your scans, you do the sectors, right? You might go through thousands of stocks looking for these needles in a haystack, and then you get paid from finding the needles in the haystack.
Right.
But now that's not necessarily the case, or if it's not the case, it's nobody talks about it because, right? These stocks like A&F, even Gap, right? Gap. I had a swing trade going in Gap, and it was one of my better ones of the year.
Yeah, another apparel store. Yeah.
You don't think about them the same way you do the hot tech stock. Like, what do you think is happening here? Because
we still do it. We still do it, and it's working, and that's how we find these things, right? It sounds like somehow you're doing it too, because you are finding them. You knew about.
You are finding them, but it's like,
no one's talking about it, but that's and I think you also have a bigger edge in these stocks, right? Because they're not as known as played, so you can get in early. You can get a jump on these things and get some of the big moves. But yeah, we're still doing it, and we're finding it.
Guys, he mentioned something important. We always like nice liquidity and good volume in stocks. But like I've noticed, like if a stock is doing 50, 100 million shares a day, 200 million shares a day in volume, your edge decreases quite a bit. There's a certain subset where you want liquidity, but you don't need crazy volume where the whole world is in on it, right? Where you can get like crazy good range. And, some of my best, especially on the swing trading side, some of my best trades have been in these stocks that like nobody really talks about.
Right. And that's kind of the sweet spot. And this, you talk about it all the time, is not necessarily the low floaters for swing, the 10 million floats that are really light that can be manipulated, but the stocks that are trading around a 50 million float to like 300 million float right in there. Those are the stocks that can really move, right? Of course, the stocks with the billion floats, like the Googles and the Amazons, those things will move too. But these extreme moves, if we look at ANF here, the float size is 48 million, so right around 50 million. So it doesn't take a ton of volume to push these things, right? And look at the percentage gain. What's going to beat a stock like this? This thing has run from 22 to 173 over the last year and a half. So, outside of NVIDIA, even the big techs that seem to be moving like crazy aren't moving like this stock. No. And this is where you can get the edge to beat the market and to even beat the stocks that everyone else is trading, is to do that analysis and find these stocks that aren't really talked about quite as much. And that's why we're looking for this rotation into these areas that maybe have been down some, that people aren't really paying attention to. But we know the market's starting to shift. We know we have some potential news events coming up with inflation and the Fed. And if those start to turn positive, we want to jump into those areas. So the areas we've been talking about a lot in the report are that consumer discretionary area. So retail, Abercrombie has been moving, but there are other retail stocks that haven't really been moving yet. And we're waiting for those to see. We talked about Ford and how GM had started to move, and now we're watching for Ford. We're not trading it right now, but you want to be prepared and get in early when those moves come. So
yes, 100% the case. Evan had just mentioned in the chat. He's like, if you think about it, Deck has been a better performer than NVIDIA.
Right. And no one, we could pull up Deck here. And these are all, this area Deck here, very strong. And look at the float, 23 million. This is what you want to be on the lookout. If you're a retail trader, these are the type of stocks you really want to be on the lookout for. That can really
and
move.
You're right about that, like kind of sub 250 million, 300 million float, like HIMS, like
right.
These kind of $10 billion companies. I think there's a sweet spot in that kind of mid-cap life, $5 billion, $10 billion companies, where you can get, when they start to move, because it just takes one small piece of news, one PR to get these things going. Guys, the thing is, when you're a $1 trillion company or $200 billion company, you need significant news to get these things going. Like HIMS, they just announced that, hey, on our website, we're going to start selling these, the fat loss pills. Right. That everybody's been taking.
HIMS is it's interesting that it's really interesting you mentioned HIMS, because we were just talking about this in the swing report too. We watch these IPO cycles, and maybe this wasn't an IPO. Maybe it looks like this was one of the SPACs that has lasted. But anyway, so we can see here, HIMS, we watch these IPO cycles very closely, where they post an IPO high, they bottom out, and then get on these big runs. And when they break their IPO high, they often go on this explosive next run in the stock. And we're watching HIMS very closely now, because you can see here's the IPO high, went right up to that level, is starting to consolidate now. And look at all the good volume coming in. We talked about accumulation. So a couple of things. One, you could kind of guess and get in this early, or just wait for the breakout. But we are watching this stock very closely.
So how would you give me an idea? Would you, on something like this, would you wait for it to break the IPO highs, which is maybe about 25 to 26, or do you look close on a shorter term time frame and kind of preempt it a little bit?
So the problem with preempting it is an IPO high is such a strong resistance level.
Resistance.
Think about what's happening here. There were, back in 2021, there were people super interested in this stock, right? It was changing the game in the products it sells. And so there are a lot of people who have been holding throughout this whole process, right? They got in up here, 21, 22, 23. They held through it going all the way down to $2. And they're looking at it as, wow, if it gets back to this level, I can break even on it, right? And you'll see oftentimes a lot of selling at that IPO high.
Sure.
So the safe play is to just wait for it to break out once all the sellers have sold, and then it starts its next run. And that's essentially what we saw here, right? It did go right up to that IPO high, and that's exactly what happened. So the nice thing here is we have had that IPO high selling. Now, what I would love to see is some pullback, which we're starting to get now, some consolidation. And if it starts to pull back and consolidate for a while, then I might enter early, because we've had that initial selling happen, supply kind of get taken out already. Another thing you can do is, if it does pull back a little deeper, you can enter on the pullback. As it gets towards that high again, you can take some profit off and then hold through as well. So two plays right now, but in the near term right now, I probably wouldn't enter here. I'd wait to see if it does break the high.
Nice. Give me a rundown. Okay, so you do like this one. You got a sneaky fave you're looking at.
A favorite? Oh, there's so many stocks. Let me think of what's on our watch right now. What's been kind of under the is there's the big tech social media, like Meta, media company like Netflix, but the Pinterest, the Snapchats, the Spotifys that had fallen out of the favor for a while.
All right. Well, let's. We got a lot of youngsters in chat. Let's look at Snap.
Yeah, Snapchat here. Actually, my favorite right now is Pinterest, but Snapchat here. We can see that whole market cycle. So there's the market cycle that happens over and over again, right? Where you get that kind of bell curve. You have a bottom. You get the big run up, the topping pattern. The stock gets crushed. People forget about it. Starts to bottom out, and then a new cycle will emerge. And we're starting to see that in Snapchat right now. Look at all this. If we think about accumulation and distribution, look at all this accumulation on the way up. We saw distribution on the way down. And it feels like now the last of the selling has happened, and subtly we're seeing some positive things. Notice here, one of the things we look at in bottom formations, one is, are we seeing accumulation? And two, are we starting to see bottoming formations? And we're starting to see here higher lows. Each one of these lows has been higher than the previous low. That's a positive. If it was truly not starting to improve, we'd see either a piercing of those lows or tests of those lows, which we're not seeing. So we're seeing higher lows, and we're seeing higher highs as well. Each one of these kind of pivots here was a higher high. So we're seeing positivity in that regard. We're starting to see some volume pick up as well, and we had very good earnings. The last earnings back in April, May as well. So watching Snapchat very closely. What I want to see here is it break this range. If it breaks this range here, it's essentially broken out of this bottom formation, and I would expect a trend here. So watching Snapchat very closely. Spotify. Notice here, Spotify already did what we're watching for Snapchat. It made its bottom here, and it's a continuation pattern. It's actually about to test its kind of pandemic high here, which is around 390. It's sitting at 321. It's actually a decent play now to try to play it up to that 390 level. So we're watching for a good entry spot here on Spotify. And then Pinterest, which had been crushed post-pandemic, is kind of doing the same thing as Snapchat, and same analysis as well, except it kind of already broke out of that bottom and is now also in
What's
continuation phase.
your fave out of these?
Pinterest right now, because it's already broke for a trade right now. Pinterest,
Sure.
because it's already broke out of the bottom formation, and we can just trade these continuation patterns now, and it just broke out of this range as well. So I think it's an entry right where it is right now. In terms of potential for big gains, if it actually does it, it would be Snapchat if it can break out of this range. But it's not a trade right now until it breaks this range.
Hey, Paul, let me ask you something, because I feel like this has actually impacted the markets quite a bit. Is, the kind of traders, or the subset of traders, has changed quite a bit of the last few years, in that the options market has taken off big time. When we started trading, or when you taught me, it was just monthlies, right?
Right.
And a lot of stocks, it was like quarterlies, right? Like, you want to get XYZ stock, you go fucking 3 months out, right? And so nobody really even traded options. Like, we never even thought about it at the time, unless you were doing some hedging or straddling, which are not really our things, because real men make bets. We don't
we picked I mean, the whole point of our analysis is kind of understanding what direction the stock's going to go.
Real men make bets. They lay it on the kitchen table while they're speed chopping carrots. We don't hedge. And so the options market was like just pointless for us. But now, all these damn stocks are so expensive, first of all, because we've a big bull run for so long. But now you can trade options on them. So, people didn't want, you could have traded NVIDIA at $1,000, but you could buy the damn options for $2 every, that expire every Friday. And so you just get all this volume that comes into these names. How do you think that's impacting the kind of old rules that we used to live by, which was big float stocks don't move, low float stocks move? And then not even necessarily even mid float stocks, right? But like back when you taught me, we would never even think about trading a stock that had 10 billion share float. Not that there were any. There were none, but Apple was probably the first one that kind of became like a very big float. There were a couple that were in the 1 billion range, but you just didn't have the multi-trillion-dollar companies back then either, right? Like I believe when you were teaching me, ExxonMobil was the biggest company in the world, and they were about a $500 billion market cap. Think about it, right? So now we've got stocks that are 3 trillion, 3.5 trillion. Times have changed. But how do you think about that? And what do you think about options trading? Do you recommend it for new traders? Do you think it's putting are you a fan of it? I am kind of a fan in the way that like a lot of stocks that we never would have thought of trading, we're allowed to trade now.
Well, I trade options. Yeah, in the swing report, because we're not teaching options in there. I don't do it, but I trade options. The one thing with options is you really have to know what you're doing. It's adding a new layer to what you're doing, right? And a lot of people will jump in and they understand the swing analysis, and it's great for some of the strategies we trade as swing traders. Adding the layer of options to it, especially, it benefits you in a couple of ways. Obviously, there's hedging. You can protect your downside. It keeps you in some trades, like where we place stops and we have to get out if it hits a certain level. When you're trading options, you can allow for some more volatility. The other thing is if you don't have a huge account, right? And we talked about, the Chipotles and when NVIDIA was trading over 1,000, it can be tough to enter positions, because even if you logically know that 50% move is a 50% move, it still is going to take up a lot of your account.
Sure.
Whereas if you trade the option, you're obviously able to get in a lot cheaper and trade some of these stocks. So I think options is great. You have to have a deeper understanding of what you're doing. For example, let's say we like Snapchat here. We talked about a potential break of this range here. I think what most people would do is just jump in and buy calls, right? But you really have to think about what you're doing with those options. And there's another layer. We had taught an options class last year where we really went deep into this, but you have to understand things like implied volatility. And if implied volatility is low on the stock, you can buy calls. If it's high on the stock, that means premiums are expensive, and you can still be bullish, but you have to use a different strategy. You might have to sell puts instead of buying calls. And even that, for someone who doesn't understand options, it's probably like, what are you talking about? But you have to understand these things and really understand what you're doing with options before you start trading it. Otherwise, you'll get crushed, right? But if you know what you're doing, it adds a new layer, and it's really beneficial to people with smaller accounts.
What do you think about these zero DTs? Because they're like super fun, but like at
least I have never messed with those.
So, you gotta try.
Yeah, I'm a swing trader. So usually when I trade options, I'm going, a month or two out on the strike days.
Oh man, you gotta try it a little bit. It's really fun. But
yeah, you'll have to teach me. You can teach me.
I mean, there's really nothing to teach. I don't even look at options price charts, right? You just look at the chart. But like then you forget about the decay, and that's what gets you on these things. I would say for new traders, for guys that are new, there's a subset of a handful of things that happen here in trading. So trading equities is the safest way to learn how to trade, and the one that gives you the longest and the biggest runway to succeed long term, especially if you're swing trading. The odds of you blowing up your account trading regular stocks is very, very small. You could lose 5% here, 5% here, but you'd have to lose a lot of damn trades in a row to blow up your account. What happens is right now with futures, because you have these trading combines and then you have options, is the marketing is geared towards people that have very limited amounts of capital that need to make large amounts of capital or think they should. The people that have limited amounts of experience, and then if you couple that with people with limited amounts of capital, and that's where the marketing goes. It used to be that style of marketing was geared towards the penny stock traders. So if you had $5,000 and you were a youngster trying to make $10 million, $5 million and live your dreams, you would go to the penny stocks. Now, it is geared towards this other style of things. And so you have to know how to do that, because you have to learn how to do that, because if you can nail it, it's fantastic. But you have to learn how to trade equities, I think, first. And before you can day trade, you got to learn how to swing trade. You got to learn how to see big picture stuff. And then if you can see big picture stuff and you're like, okay, I want to do faster trading, then you can go to equities. And then if you really got the fast hands, then you can go to the options. But you don't want to just choose something because of the amount of capital. You should choose the style of trading you do because you have a knack for it and you can make money at it. But what most people do is they choose their style of trading and their instruments based on capital. And so that's where you got to be a little bit just careful with, things. I like trading options, but I also know, man, it's fucking it's fast. I did this red to green move on SMCI the other day, and they got smoked at the red to green spot.
Oh, you're day trading options.
I was just messing around day. I was up big on the day, and I was like, after I did that. I ended up losing like $6,000 in one candle. And I was like, why did I do that, right? Yeah. And so you do got to be a little bit careful with these kind of things. I like trading options. Like Levi, he does them a lot better than me because he's very tactical with these things, and he trades a lot less, where I make hundreds of trades a day sometimes, and he makes 5 or 6. So his are really precise, really precise. And so there's something to be mindful of. There's a rite of passage in trading, which is if you can't see the big picture, you can't see the little picture. And if you can't see those in equities, you're not going to be able to see them in probably options and futures and all of this kind of stuff. So just got to be mindful of that. Paul, before we get going and wrap this bad boy up, give me a rundown, because everybody's talking when they think about trading, it always seems like such a big, long, nasty path, right? If you've got a 1-year blueprint, Like I know nothing about trading, right? Like, yes, we know that like the whole world is full of struggle porn, right? Struggle this, struggle that. I'm homeless. I lost all my money. I lost my car. I sold my kidney, right, to become a trader. But like in reality, like, you know, a good chunk of us are just regular people and we want to learn how to do this. You get a 1-year blueprint, right? But like where do you start? What would you start with? You know, and where do you take it?
I would say there's two things, and it's similar to how you started, right? Which is one, find someone who knows what they're doing and can guide you, but they can only do so much. They can only guide you, right? I
Sure.
showed you some stuff, but at the end of the day, you put in the work. And I remember you were going through thousands and thousands of charts, and that's what you have to do. You have to put in the grunt work and just start studying charts. What I always tell people, especially new members to the Swing Report, when they ask me like, where should I begin? Of course, we have the course, but one of the best things you can do is just take, like, say, the S&P 500, and every day just start studying those charts and go back 4 or 5 years. And if you go back 4 or 5 years, you probably are going to see 2 or 3 market cycles, and in that, you're going to start noticing things on your own, or the blueprint that you've been given, you'll start to see those things play out. Like if I just pull up, say, Google here, we can pull this thing out, and within this pattern, we see, you know, an insane run. We see a topping pattern. We see a bear market. We see earnings breakouts. We see earnings breakdowns. Just about every setup we trade, we could look at Google, and over the last 5 years, you'll see those setups.
Sure.
So part of it is pattern recognition. You have to have seen these things. And of course, you're not going to be able to see them live in real time because not everything is happening. So you have to study the past. So chart after chart, just take, do something like, here, you can pull up SPY here on TC 2000. Here's the 500 stocks that make up SPY, and just start going through these charts and look for patterns that are developing and emerging. I would say that'd be the starting point. Find someone who knows what they're doing. Get an understanding, and then just start going through charts.
Yeah, I agree. Like I tell people something similar, which is like, go through every single year, 2023, 2022, 2021, 2020, 2019, on TC 2000 or any trading platform, you can do a custom date sort. So look at the top 100 to 200 top gainers of that year, right? Every year there's going to be a couple hundred stocks that made maybe 50% or more gains. And flip through every single one of those. It's very simple. On T2000, you literally just scroll, highlight, and then you can pull it up. So study the top 100 to 200. I'd go 200, but usually there's not. Once you get past 100, that you're getting into they're not that hot, but that's all that's there.
And they're all going to be very similar too.
Yeah, and start studying them. What were the sectors? What were the patterns? One thing, and you'll start to see some commonalities. They all come out of a big base, right? Oftentimes, majority of times, they have some kind of catalyst, some kind of gap, right? Usually, if it's a dead stock, if it's a dead stock near lows, like an accumulation phase, there's almost always a gap. Very rarely does the stock stay in accumulation phase and then it just starts trending up hundreds of percent. There's always a gap. Okay, what was the piece of news? What caused this thing? Most likely it's earnings, right? Or like some kind of negative cloud of sentiment was removed, something along that, right? And start marking these things down. And so you start training your brain to like, okay, what's the specific sequence of cycles that stocks come in? They're dead. They have a piece of news out that makes them undead. The news has usually this kind of rhyme or reason to it. This is the share profile of the stock, 300 million share float, 500 million share float, this many outstanding shares, this much daily volume, so on and so forth. Float is just one thing, but the amount of volume a stock does is also, that kind of ratio matters a little bit too. You can be a little bit of a higher float stock, but if you have, 100 million shares a day in volume, it's a little bit different. So you can start marking those things out, and that's going to give you like an acute understanding of what winners look like. Because whether you're a day trader or swing trader, You want to be trading winners. You want to be trading trenders. Everybody can sit there and look at Tesla all fucking day and look at AMD all day and look at Microsoft all day, but you're probably not building your account to like huge levels from little levels, trading Microsoft. You can make income and things like that. But when you think about like the big winners of every year, right, you want to start like kind of thinking about those kind of catalysts and stuff like that, right? Like this VRT was a big one, right? Like, and that's an unknown stock. Like I had that in my swing trade account for just like a few days and I sold it early. And there's so many of these kind of names out there. So like what causes these things? And I would sit there like even Lily's been a huge winner this year, right? In the last 2 years. So like what are the profiles and the characteristics of this? What's that piece of news that gets this thing going? And start building out just a little bit of that. I use Evernote. You don't have to, freaking get crazy with it. But right, start jotting some things down. And you're going to start understanding what big winners look like. CVNA the last couple of years. This stock's this company's a huge fucking turd, right? Most likely. But like if you look, it was $6. What, last year, a year and a half ago or whatever, $6, $4. So it's a big, that's a big something. And so what are the things that gets these things out of those dead zones and gets them trending? And, what do those stocks look like? Yes, like NVIDIA this year was a huge trender, but a majority of the year, SMCI and so on and so forth, but a majority of the years, like it's a lot of times it's like these companies like VRT and CVNA and ANF and like these other companies that are like really doing it. And you want to understand what those look like and how they move, because that's where the real money is made. If you're coming in with $10,000, $20,000, $5,000, you better not be trying to buy damn Microsoft or like even this Google's breaking out right now. It's fantastic. But so you're not going to make your millions trading the Google right now.
Right. So here, this is one of our watch lists here. I just sorted it by the year's winners, what you were talking about here. And, of course, there's NVIDIA here, but look at all these stocks that no one's talking about, right? You mentioned Carvana. ELF is one of my favorite. Who's even talking about ELF? And look at the move ELF has made. So the other thing is you start to notice commonalities in all of these things. Just about all of them, you can see very similar setups playing out in here as well.
Guys, study these bad boys. I think that's going to be a huge thing. Let's wrap this thing up, Paul. I want to thank you for coming on here.
All right, this is fun.
First of all, where can everybody find you? Obviously at Bulls on Wall Street, but give me a little rundown. Like, what do you think is gonna happen by the end of the year? How do you think this election is gonna affect things? And how are you personally? I know we're read and react guys, but what do you got an inkling of what's going on?
Read and react, but we I wouldn't say see through the tea leaves, but we see what's coming and are prepared for them, right? So I'm not focused as much on the election.
Sure.
Of course, I'll dig into season. What I always do around election season is dig into seasonality and start to look for, in past elections, what tends to happen. And usually, honestly, the election doesn't have a huge impact. What I'm really focused on is essentially what controls liquidity in the market. We alluded to this already, is what the Fed's going to do. So I'm waiting for that rate cut or indications of a rate cut. So like we said before, if that rate cut happens, these areas that we talked about where we're not seeing a lot, some stocks are moving in anticipation, but I think we'll see some real big explosive type moves in some of those consumer discretionary stocks, the retail stocks, the travel stocks, specialty. We didn't really touch on this, but specialty tech or some of the lower float tech. The big tech's been really moving. I like to look at this ARK ETF for the specialty tech and the kind of those biotech companies that can really run but haven't done much of late. And you can see how much this area has lagged because interest rates are higher right now. So there's not as much investment. But if we start getting to indications of rate cuts, this is where we're going to see some of those big explosive moves. So I'm waiting on that. Obviously, we can wait for the potential rate cuts to happen, but we're watching those inflation numbers very closely, which is something new. It's not something we normally do, right? How often have you heard me talk about let's analyze the CPI and PPI numbers, which we normally are not doing, but right now that's something we should really be paying attention to. And if we start to see indications of that, we'll really look to these areas, and that's what I'm really excited about towards the back half of the year. Is these areas that have been beaten down like this, breaking out of these ranges and starting to make big runs.
Nice. Well, Paul, as always, it's been real. We're going to do this again.
All right. Great. Yeah, this was great. All right.
All right. Take care, brother.
All right. Talk soon.
Hey, boys and ladies. Adios, muchachos. Peace in the Middle East. Try not to get yourself in too much trouble tomorrow and the rest of the week. It's a little bit of a dead zone in the market. Market's still hot, but you got to be a little bit careful, banging on the same drum. We got a couple cross currents happening here. So I love you guys. I shall see you. Bro, Sonny, nobody gives a shit. I love you. Guess what? You're a pro shit talker. It's nice. But you need some new jokes, baby, because I tell the best jokes. Yo, let's take a look, pal, on your gold and silver here. So this is stuck in a range, brother. It probably needs to kind of come out of this. It probably needs to come out of this to get going. Obviously, 225 is a breakout. You'd want to probably preempt it a little bit if it gets there. I don't think you got, man, that's some tricky shit right there. We'll see. Let me see what's going on this. Hold on. Let me bring up the chart here before I get out of here. Let me fucking flip this thing over. I got Paul's thing. Oh, there it is. Whoop. All right. Pal, you see how this thing is like just stuck in range here, brother? Like you're just in a little bit of a dead zone. You probably need to break over 218 to speed up and then, see if it gets to 225. But right now it's just stuck in range. And then silver's at the 50-day moving average. Keep an eye. If it breaks down here, you may have some room to fall. So both of these, the long-term trends look okay, but I would say in a short-term, intermediate-term trend, they're a little bit dead. So probably just to leave alone for now. What you want to see is, right, I'd have the 9 EMA cross over the 20 and let that trend speed up. And then, you'll have something probably a little bit better.